All right, for this video, I wanted to go over what types of travel expenses are deductible for your business. So the reason why I want to do this video is I am seeing some absolutely horrendous tax advice. A lot of it's on social media where people are telling entrepreneurs that they can basically travel and write off all of these expenses as part of their business. And it's just flat out wrong. It's horrible advice. You're absolutely inviting an IRS audit and you're going to lose. So I've got two slides in front of us. I want to talk about the tax code rules, the treasury regs that cover this issue, and then some examples and also a reference to the IRS publication 463, which also addresses these issues. So our starting point here is always section 162, right? So when we have a trader business, an ordinary trader business, you are allowed to deduct under Section 162 of the Internal Revenue Code all those ordinary and necessary expenses in furtherance of the business, right? So what types of expenses are ordinary and necessary to carry out your business activities? Any expenses that are personal in nature are not deductible, okay? This is generally the rule. Now, Section 162A2 goes into a little more detail, right? It specifically allows deductions for travel expenses. This is meals and lodging while away from home in the pursuit of your trade or business, right? So if you live in a city and you have to travel outside of that city for business purposes, the travel expenses, if again they're in connection with the trade or business, can be deductible. Now here's where we get a little more detail from the Treasury regs, okay? So Treasury Reg Section 1.162-2A says that if a trip is undertaken for other than business purposes, the travel affairs and the expenses incident to the travel are personal, and the meals and lodging will also be personal. They're just personal living expenses, meaning they're not deductible. Okay, so again, the standard is if you're taking a trip and it's not for business purposes, it's not deductible, obviously, right? Because it's personal. So now, dash 2B1 further states that if a taxpayer travels to a destination and while at such destination engages in both business and personal activities, the travel expenses to and from are deductible only if the trip is primarily related to that taxpayer's trade or business. If the trip is primarily personal in nature, the travel expenses to and from, so let's say airfare, are not going to be deductible, even though the taxpayer engages in business activities while at such destination. However, expenses while at the destination which are properly allocable to the trade or business are deductible, even though the traveling expenses, so think of airfare, to and from are not. Okay, so what's a simple example of this? If you go on vacation, right, you book airfare, hotels, you're traveling to a new city, if you just happen to be checking email while at this destination, if you take a client call, if you take a staff call, the trip is still a vacation, right? It's still personal in nature. Just because there's some incidental business component that you're doing while on vacation does not change the whole character of the trip. And this is what I see all too frequently on social media is people saying, well, book a trip somewhere, and then as long as you do some business, talk to your clients, check your email, maybe if you're a social media influencer, you film a YouTube video, it doesn't work like that, right? If the trip is primarily personal in nature, you cannot be writing all this stuff off simply because you said you checked some emails while on holiday, okay? Now, 162-2B2 provides a little more guidance here, right? It says whether a trip is primarily related to the taxpayer's trade or business or is primarily personal in nature depends on the facts and circumstances in each case, okay? So there are no kind of hardline rules here, right? It is a facts and circumstances test, which is a lot of U.S. tax law, frankly. The amount of time during the period of the trip which is spent on personal activity compared to the amount of time spent directly related to the trade or business is an important factor in determining whether the trip is primarily personal. If, for example, a taxpayer spends 1 week at a destination on activities that are directly business related and then subsequently spends an additional 5 weeks for vacation or other personal activities, the trip is going to be primarily personal, right? Absence a clear showing to the contrary. So and this is in the tax law, right? So this is a Treasury reg. This isn't some obscure, blog posts here. This is what they have written into the regulations. What they're asking here is, well, look at the time factor, right? If you're traveling somewhere 1 week on business and then you're spending more time than the days you were on business doing personal things, well, it looks like it's primarily a personal trip, okay? All right, so let's go to the next slide here. Okay, so what we want to talk about specifically on this slide is deductible travel in the U.S. Okay, so publication 463 has a lot of good guidance in there. They have other examples, so very helpful. Now, the reason why I want to focus on the U.S. travel is because there are actually different rules for traveling abroad. So if you live in the U.S. and you need to travel to Europe for work, there are different standards that apply. Also different standards that apply on, they call it luxury travel. So if you're traveling on a boat, so whether it's a cruise ship or a yacht or some other type of seaworthy vessel, different rules apply. So I'm talking about just traveling within the U.S. for these examples and rules. So the publication 463 provides a little more clarity here. It says, if the trip was primarily for personal reasons, such as vacation, the entire cost is not deductible, okay? That's what we saw on the previous slide in section 162. Scheduling of incidental business activities during a trip, such as viewing videotapes or attending lectures dealing with general subjects, does not change what is really a vacation into a business trip, okay? Very, very clear here. So again, a lot of this advice I see on social media is just horrible. I mean, you're basically committing tax fraud if you listen to a lot of these people. Okay, now, trip primarily for business reasons. You can deduct all the costs if the trip was entirely business related. Okay, so we're not talking about any personal component whatsoever. If you travel to a city because you're working all day, you have a hotel, you have flights, and then you just go back home, that's entirely business related. So you can write off the cost of the flights, write off the cost of the lodging. Your meals while traveling away from home are deductible, okay? Now, if you extend your stay for a vacation, or if prior to the work component you're on holiday, right, and then you start the work. So if you have that vacation component, you have a personal side trip or other personal activities, you can deduct only the business-related travel costs, okay? So the taxpayer needs to keep more detailed records here because they have to bifurcate what's business versus what's personal. The personal stuff, not deductible, okay? So let's look at an example here. We have John, and he took a trip primarily for business and what he can write off. So John lives and works in Chicago. He runs a marketing consulting agency. He books a trip to Denver, so he's flying Chicago to Denver for 5 days to meet with clients. So he's in Denver for 5 days. He's got a hotel there. He's working all day, right? It's a business trip. Then, after the 5 days is completed, he rents a car and he drives from Denver to Keystone because he wants to go skiing for 2 days. Now, the trip in its totality, so 7 days long, 5 was business, 2 is vacation. The trip was primarily for business reasons, right? So what John can do is he can deduct the cost of the flights, right? Chicago to Denver and the return trip, those are deductible. And obviously he can deduct the cost of the hotel when he was in Denver, and he can write off those meals, okay? But where it changes is that vacation component, right? So now the 2 days that he spent in Keystone, he can't deduct the cost of the rental car, right? He can't deduct the cost of the hotel stay in Keystone, and he can't deduct any of the meals in Keystone. Can't write off his lift passes, none of that, right? And again, that wouldn't change even if he took a call, all right? So if he's in Keystone and he checks his email or he takes a business call that lasts 20 minutes, it doesn't change the character of that piece of the trip. That's a vacation component, so that's not deductible. Now let's look at a trip here where it was not primarily related to business, and so what can you write off? Okay, so we have Frank. Frank here, he lives and works in Atlanta, and he runs a law firm. Books a trip to Miami for 3 days, so he's there Monday, Tuesday, Wednesday. And while in Miami, he takes 2 client consults, calls on Monday, and then he has an hour-long Zoom meeting with his staff on Wednesday. Apart from that, he's not working, right? He's lounging by the pool, he's working on his tan. Okay, so Frank, now also that week, he has obviously the flights down there, the hotel, meals, and then he had to pay $15 to the hotel for better Wi-Fi service so he could make those calls, he could have the Zoom meeting. Well, of all of this, right, Frank can't really deduct anything other than that $15 Wi-Fi charge. I mean, even that might be still a stretch, but at least that you could argue was directly related to the business because he needed better Wi-Fi to take those calls, do Zoom meetings, share a screen, and a lot of hotels do charge those kind of rates for that kind of service, which is a bit ridiculous, but nevertheless, that was a cost that he had to incur. Again, so the trip wasn't primarily business related. He's on vacation, okay? Just because he booked some client calls, touched base with his staff, doesn't mean it changed the character of the trip. So none of the flights are deductible, none of the lodging is deductible, none of the meals are deductible. The only thing in this case that he could really argue he can write off is just that $15 a day for the Wi-Fi. So, the lesson here is, you use common sense, right? If it sounds too good to be true, it is, right? You cannot, as a business owner, go on vacation and write everything off if you're on vacation. It has to be work, business related, okay? So, very, very careful. Pay close attention to these rules. I encourage you to read Publication 463. And then, of course, if you want to really bore yourself, you can actually read the tax code, Section 162, and the related Treasury regulations thereunder. But, yeah, be careful out there with what it is you're writing off, because if you're writing off stuff that's personal and it's not deductible, that's tax fraud, right? And if you get audited, the IRS is going to have a field day with that. So, okay, so that covers it. I hope that was helpful. If you have any questions, please feel free to leave a comment below. Happy to answer any questions I can, and I look forward to see you again on the next video. Thank you.